If you sold a house in 2024, did a Roth conversion, took a big distribution from an IRA, or had any other unusually high income year, there's a very good chance Medicare is about to send you a letter that's going to make your stomach drop. The letter is going to tell you that your Medicare premiums are increasing by hundreds of dollars a month, maybe close to $1,000 a month if you and your spouse both got hit. They have a name for this. It's called IRMAA. And here's the worst part. It's based on income from 2 years ago, which means by the time it shows up, you've already spent the money. I'm Andy Childs, a licensed Medicare broker in Mesa, Arizona. Today, I'm going to walk you through exactly how IRMAA works, the 4 life events that can wipe it out, and the form most people don't know exist. Here's the thing nobody tells you about IRMAA, and it's going to reframe this entire video. Most people who get hit assume it's permanent. They get the letter, they read it, they swallow hard, and they pay it. They figure they made the money, this is the cost, end of the story. That is wrong. IRMAA is annual. It's recalculated every single year, which means a one-time spike in your income, a home sale, Roth conversion, inherited IRA distribution, only hits you for 1 year, sometimes 2. And in some cases, you don't even have to pay for it that 1 year if you qualify for an appeal. So this video isn't just about how IRMAA works, it's about how to make sure it doesn't cost you more than it has to. Picture this, you're 67, you're in Mesa, you and your spouse decided to downsize last year. You sold the family home, made a nice profit, used some of it to buy a smaller place, and you parked the rest in your retirement accounts. The sale showed up on your 2024 tax return as a big year for capital gains, and you felt good about it. Your CPA didn't say a word about Medicare. Fast forward to October 2026. The Social Security Administration sends you a letter. Your Part B premium just jumped from $202 a month to over $400 a month. Your Part D drug plan got hit too. Extra $80 a month on top of the premium. Same letter to your spouse. Combined, you're now paying around $500 more a year for Medicare than you did last year. For income that you earned 2 years ago, that you've already paid taxes on. That's IRMAA. And the people who tell you about it usually tell you after it's too late. So let me tell you before. Let's get the basics out of the way, because if you don't understand the mechanics, none of the strategies make sense. IRMAA stands for Income-Related Monthly Adjustment Amount. It's a surcharge that the federal government adds to your Medicare Part B premium and your Part D drug plan premium when your income crosses certain thresholds. It's not a tax, it's not a penalty, it's officially called an adjustment. But it walks like a tax and it quacks like a tax. So call it whatever you want. Here's the structure as of 2026. There are 5 tiers. The base premium for Part B in 2026 is around $202 a month. And that's what you pay if your modified adjusted gross income, MAGI, is below the first threshold. For an individual filing alone, the first threshold is around $106,000. For a married couple filing jointly, it's around $212,000. If your MAGI goes above that, you jump to tier 2, then tier 3, and then 4, then 5. At the top tier, you're looking at a Part B premium that's well over $600 a month. And there's a separate IRMAA on top of your Part D plan that adds another $70 to $90 a month depending on the tier. But the part that surprises everyone is the Lookback. Medicare doesn't use this year's income to calculate your IRMAA. They use your tax return from 2 years ago. So your 2026 IRMAA is based on your 2024 MAGI. By the time the letter shows up, you can't go back and undo whatever caused the spike. That's the basic structure. Now let me show you the 4 things that trigger it. This is the part that bothers me most about how IRMAA gets explained, or doesn't get explained, by financial advisors. Here's what triggers IRMAA. It's not just high income. It's specific events that pop up in your MAGI for 1 year. even if your normal income is well below the threshold. The first trigger is a home sale. Capital gains over the federal exclusion. That's $250,000 for an individual and $500 for a couple. That all counts towards your MAGI. So a profitable downsize, even when you reinvest the money, can spike your income one year and IRMAA you the next. The second trigger is a Roth conversion. Every dollar you convert from a traditional IRA into a Roth gets counted as an ordinary income that year. Roth conversions are great long-term planning. They're just lethal for your IRMAA in the year you do them. The third trigger is required minimum distributions from an inherited IRA. The rules changed under the Secure Act, and now most non-spouse beneficiaries have to drain inherited IRAs within 10 years. If you inherit a big IRA at 65 and start pulling chunks at 67, those withdrawals show up as ordinary income, which means IRMAA at 69. The fourth trigger is something most people would never guess: a one-time bonus, a deferred compensation payout, or selling appreciated stock. Anything that generates a big chunk of taxable income in a single year can push you over a threshold for 1 year, then drop you back the next. Here's the encouraging part. Because the look back is 2 years, you have time to plan. If you know 2026 is going to be a Roth conversion year or a home sale year, you can model the IRMAA hit before you pull the trigger. Most CPAs don't do this automatically. You have to ask. Or you can ask a Medicare broker who actually pays attention to this stuff. This is the insight that almost nobody tells you about, and it's worth real money. There's a form. It's called the SSA 44. Its full title is Medicare Income Related Monthly Adjustment Amount Life-Changing Event. And it lets you ask the Social Security Administration to recalculate your IRMAA based on your current income instead of your 2-year-old income. If you've had a qualifying life-changing event, here are the qualifying events. There's 8 of them. You retired. You lost your job. Your hours got cut significantly. You had a death of a spouse. You got married. You got divorced. You experienced a loss of income producing property due to a disaster or theft. Or you experienced a settlement from a former employer. Notice what's not on the list. A Roth conversion is not on the list. A home sale is not on the list. A regular RMD is not on the list. So the SSA 44 doesn't help with every high income event. It specifically helps when your income dropped because one of those 8 things has happened. But here's where most people lose money. They qualify and don't know they qualify. The biggest example is retirement. If you retired in 2025, your 2026 IRMAA is based on calculating income from 2024, which was a full working year. You can file an SSA 44, attach proof of your retirement date, and tell Social Security, estimate my 2026 IRMAA based on my retirement income, not my 2024 working income. If they approve it, and they usually do for clean cases, your IRMAA gets recalculated or eliminated for the year. You file the form by mail or by appointment at your local Social Security office. You file it after you get the IRMAA letter, not before. And you can file it every year it applies. It's not a one and done. If you take one thing from this video, take this. When the IRMAA letter shows up, do not just pay it. Read it. See if any of those 8 events apply to you. If yes, file the SSA 44. The worst case is they say no. The best case, you save thousands. All right, let me tie it together fast. 1, IRMAA is a surcharge on your Medicare premiums based on your income from 2 years ago. 5 tiers, recalculated every single year. 2, the triggers that catch people off guard aren't your normal income. It's home sales, Roth conversions, inherited distributions, and one-time taxable events. Plan for these before they happen. 3, the SSA 44 form is your appeal route. 8 qualifying life events. If one applies, file it. That's the framework. Tier, trigger, appeal. If you're approaching Medicare or you're already on it and you've got events like a home sale, Roth conversion, or retirement coming up, subscribe. I post 2 videos a week. Medicare is most of what I cover. And if you want to talk through your specific situation, whether you're already getting hit by IRMAA, whether you need to file an SSA 44, or whether you're trying to plan around an event before it triggers, there's a link to a free consultation in my description. You can also find my number there. Working with me costs you absolutely nothing. Carriers compensate brokers directly. So my job is just to make sure you end up in the right plan and you don't lose money you don't have to lose.